PureStorage went public on the New York Stock Exchange, raising over $400 million. CEO Scott Dietzen is here to tell us about the company and why they're going public right now. Thanks, Scott. Congratulations on the IPO.
Oh, thanks. Good to be with Techcrunch. So the company is a pioneer in flash storage. The storage market hasn't changed much in the last 25 years since EMC emerged as market leader, and flash and cloud are poised to disrupt this market in a way we haven't seen. PureStorage was the first mover in delivering all flash storage, actually below the price of disk, and we've seen phenomenal growth. It's a $24 billion market, and our performance to date has been, we think, the fastest systems growth in history, faster than Cisco, NetApp, Data Domain, Riverbed, or Palo Alto Networks. And so, the intent is to keep this meteoric growth going.
It is a competitive market. You mentioned some of them. There's Dell, EMC, HP. How are you going to stay ahead of your competitors and keep innovating?
Well, so we have the luxury of the fact that there's just a complete technology sea change. Flash memory is such a profoundly different medium than mechanical disk drives, and cloud is also disrupting this market in a major way. So in this situation, the incumbent storage vendors are effectively sitting on the equivalent of tape. When the world was going disk for backup and archiving, we're seeing that same kind of transition now take place in primary storage, and we are 2 years ahead of the rest of the market to benefit from that.
You've raised over $500 million in capital. Some of your venture investors include Redpoint, Greylock. But you're still not profitable. Is that a goal, or right now you're just focused on growth?
I would say the core growth, the core focus of the business is growth. We have a $24 billion market opportunity. That whole market is going to go flash, and we want to play for the #1 share in it. If you look at our early sales hires, they're already delivering above the productivity we need for our long-term operating model. But ultimately, we're growing the business so quickly, we have to hire ahead of that curve. But even as we're growing faster than anyone's grown a business of this kind in history, we're also improving the operating efficiency. So for each additional dollar in expense year over year, we're adding $1.50 in revenue, so growing revenues well faster than expense. We've improved our operating model fivefold over the last couple of years. So this is a business that's performing very well in just a crazy large market.
It's been a difficult year for tech stocks. There haven't been a lot of tech IPOs. Any particular reason why you're going right now?
So we had the luxury of growing the business for 2 years with public market investors as still as private firms. So we've had T. Rowe Price and Fidelity and Wellington in the business. We've grown and matured to the point that we were ready to be a public company. Most of our customers are public companies. They want to do business with a public company. The goal from the outset was to build a long-term independent public company. So this was much more about the timing being right for us. We don't worry about market conditions. Great companies can come out when it's right for them.
That makes sense, but you have raised over $400 million. How are you planning on spending it?
So again, we're playing for #1 in a $24 billion TAM. That's going to require, continued hiring, in our field organization in order to access the customer opportunity that's available to us. It does mean, investing in R&D to maintain our order 2-year technology advantage over the incumbents, so we can keep this winning streak going.
Any acquisitions, any types of businesses that you would potentially buy to further advance your competitive edge?
So right now, I think there's so much opportunity we have to organically grow our business through the phenomenally talented team that we've managed to assemble. I won't rule that out for the long term, but there's certainly nothing we're looking at right now.
All right, well, good luck as a public company. Thank you. Scott Dietzen, CEO of PureStorage from the New York Stock Exchange. This is Katie Roof for TechCrunch.